After a volatile week, let's bring in Sherry Paul, private wealth advisor with Morgan Stanley. It's nice to see you again. Welcome.
Nice to see you.
So we are coming off volatility. I feel like we have a pre-Davos market and a post-Davos market. Pre-Davos, everybody's all bulled up. It's hard to find a bear just about anywhere. Now we're talking about renewed volatility, the Sell America trade, gold's continuing to ramp, the dollar's weak still. What do I do with that? Is there something to that that could be more lasting?
Yeah, I think that's a great way to put it, Scott. I think one of the most important things that came out of Davos that was a change in language was going from deglobalization to now the phrase New World Order. Deglobalizing felt a little more like conscious uncoupling, and New World Order has a much harsher tone to it, which means that the urgency around reimagining supply chains, partnerships, and frankly, advancing AI and automation manufacturing here in the United States, along with the dollar that's now lower, becomes, I think, even more urgent.
Does it mean that more volatility is ahead?
Absolutely, without question.
As these things unfold even further?
Yes, but remember that, volatility is a part of investing. It doesn't necessarily mean that something bad is happening. It means something emergent is happening. And the emergence, I believe, is moving away from the Mag 7 into what I'm calling the magnificent thematics. And if you follow these thematics of New World Order, of AI, automation, innovation, longevity, and a couple of others that we've talked about, you can start to kind of trail down into the different sector weightings that people should be overweighting in, and not necessarily moving to cash.
Are you looking at the Mag 7 differently than you used to? Has any of the luster come off of that trade in your mind? As I said at the very top, we're embarking on this very critical week with many of the earnings reports hitting starting Wednesday.
Yeah, I think that the Mag 7 have become more important than ever. We're witnessing, I think, a change from going from a company to holding companies. I mean, we've got companies that sit within the tech sector that also make movies, and we've got companies that sit in the consumer discretionary sector, that with traditional clothes sellers that are, launching rockets and building out point-and-click technologies. And so the distortion in that, I think, means that an equal weight is important if you're just a traditional investor in exchange-traded funds, but to not concentrate in these, but understand that there's a lot of value that's about to get unlocked within those companies, particularly even in the energy sector as an example.
Would you stay overweight the mega caps, or would you lean in like the market has been from the beginning of the year into the equal weight areas, as that has outperformed the market cap weighted S&P?
You asked me that in December as a lead into what I thought to 2026. I think you lean into the other 473. And my biggest thesis I'm teasing out about that is whether they realize it or not, every company is now a tech company. And if you don't understand that and realize that and understand what the application to AI is going to be in your business model, then you're going to be facing what I'm explaining to clients as the blockbuster event, these extinction events, because the race is now moving so quickly that if you don't start to model out yourself and understanding that every company is a tech company, who's going to advance in productivity, cost cutting, and advancement, like in particularly in healthcare, one of the places you and I have talked about quite a lot. Yeah. It leaves a lot of room for profits to improve across the spectrum.
I mean, it's not as easy as it sounds, though. I mean, because in terms of your AI advancement area, you have software on the list. Now, you have it broadly listed as software. Now, we know that software has traded rather poorly. Yeah. Even, Microsoft hasn't done all that much over the last year. When you say software, what exactly are you talking about? Because like 90% of the stocks in that universe feel like they're just sitting there doing nothing.
Well, I'm glad you brought that up. It's actually one of the areas that we're underweighting within the subcategories because it actually does carry the most vulnerability for advanced AI.
That's why I ask about it.
Yeah, without question. And so there are other areas within tech that you wouldn't consider traditional tech, which is why I go back to this point that now I'm starting to look at every company as a tech company. And if they're adopting the ability to compete in this massive hyperscaling of borrowing and spending, there's a convergence between corporate spending and government spending in the AI space. It's so powerful. This is not like the early 2000s when it was sort of the domain land rush for beer.com. I think these comparisons to the early internet just once again do not hold true.